if it weren't for those customers, I would have never known that this space even existed, that this problem was there. Get from an outsider looking in, you see that there's all these travel solutions, there's all these travel products. The world doesn't need another one. But it was very obvious once we started looking closer that there was a big gap here.
Welcome to Frank Growth. I'm Jason Shafton. I run growth consulting firm Winston Francois. Around here, we tell the truth about growing, the good, the bad, and the can't say it out loud ugly. Every episode, we get tactical with operators, investors, and builders about what works, what breaks, and what to do next. No fluff, no vanity metrics, and no hustle theater. Just signal. This is Frank Growth. Let's get into it. Today's guest and topic, we have Elia Wallen, Build Where Nobody's Looking. Before we bring Eli in, a quick riff on today's topic. Most founders chase the category everyone already agrees is exciting. Eli built a $2 billion plus company in business hotel booking, a category nobody thought needed reinventing. 3 things I keep seeing founders get wrong: chasing the sexy category instead of the underserved one. The flashy market gets all the funding and all the competition. The boring market gets all the margin. 2, skipping SMBs because the economics look small. 1 enterprise logo is impressive on the website. 10,000 SMB customers paying you every month is a real business. And 3, raising more capital than the business needs. Eli actually took less than he was offered in his Series C. That discipline compounds. What Engine got right: they found white space no one was serving. SMB travel was a massive unmanaged category. They built high touch at high scale, large sales teams calling on small businesses, unsexy, effective, and hard to replicate. And 3, they stayed profitable while competitors burned cash, and now they're the ones still standing. That's the frame we'll use with Eli. Let's get tactical. Eli, welcome to Frank Growth.
Thanks, Jason. Thanks for having me.
Yeah, I'm going to be honest. I'm a travel nerd with too many credit cards and points. So when my team surfaced Engine, I immediately went down the rabbit hole. $2 billion travel platform built on serving SMBs in an industry that hasn't really seen a lot of real innovation. I have to know how you built this. Your story is especially interesting because you didn't start with a grand travel thesis. You started by solving a real problem for traveling workforces, and the market just kept pulling you forward. Before we get tactical, give us the origin. You dropped out of college, bootstrapped Traveler's Haven, and eventually spun out Hotel Engine. How did you know the market was pulling you towards something bigger than corporate housing?
So what ended up happening was we were doing corporate housing with a company called Traveler's Haven, and our customer said, book hotels for us. And I said, no, basically this job has been done, right? You can solve this problem. I can't create any value. But the customers continue to push and pull us into the space. And we let them. And as we got closer to the problem, it was very apparent that there was a big gap in the industry between the OTAs and the TMCs out there. So the pull was from existing customers, and that's how we got started.
Business hotel booking isn't particularly glamorous. What's the advantage of building in a category that most founders probably are ignoring?
Well, I think that's the magic, right? If it weren't for those customers, I would have never known that this space even existed, that this problem was there. Get from an outsider looking in, you see that there's all these travel solutions, there's all these travel products. The world doesn't need another one. It was very obvious once we started looking closer that there was a big gap here. And I think the best part about it is it's a very, very big industry. And it wasn't very apparent to anyone that there was a big need. And there was.
Yeah. You've described the SMB travel market as unmanaged. How big is that white space, and why has it stayed so underserved?
I think in general, whenever a company finds success, the natural tendency is to move up market. And I think that's exactly what happened. I think a lot of companies start smaller and they just move up market, and it continues to leave this gap. I really like where we are. We're working with certainly smaller businesses than the larger TMCs. And there's a lot of opportunity that just continues to get overlooked. And I think with technology today, you can make the economics work. With having strong growth teams, with having strong outbound sales motions, you can get those smaller companies to work in a business where traditionally you need millions of dollars of GPV for it to work.
Yeah, this is where it gets pretty interesting from my perspective. You have a big sales team, and they're calling on businesses whose names and logos most people probably haven't heard of, right?
That's
So
right.
conventional wisdom says SMB economics do not support that kind of high touch motion. Why does it work for Engine?
Honestly, I feel like a lot of businesses today are trying to find new ways to acquire customers, and it can be extremely expensive. We are doing the old-fashioned smile and dial. We built a very strong outbound sales team, and we've done a lot with technology to enable them to be more productive than in years past. And so I think when you layer in AI and productivity on top of an outbound aggressive sales team, it does work. But you're right, we are not calling the Fortune 5,000 by any means, but we are I mean, there's a lot of offline companies, and frankly, this is where we found the most success is finding those customers that are still picking up the phone and want to find another solution.
Yeah. How do you maintain customer sat at SMB scale? Every account is small and the volume is huge.
Yeah, well, we continue to try to service those customers as though they are larger. So nearly every customer will get a dedicated account manager, and we do as much in the platform as we possibly can. And so it is a very self-serve motion if you want that path. But if you want support, we're not going to charge you. We're not going to ask you to sign a contract. We still make it very, very approachable and low friction for any business to work with us.
A lot of companies try to serve enterprise and SMB simultaneously, end up doing neither well. What has been your approach to stay disciplined?
Yeah, I mean, I could tell you there is pool to go up market. It's natural, right? When you even look at our cohorts, you see even more sticky, you see more dollars coming that way. But then you look at the overall pie, the overall TAM that we can attack, and how successful the SMB accounts are for us. I think abandoning that to go into a red ocean and try to start a bloody battle up there, to me just doesn't make a ton of sense. So it does take a lot of discipline, though. You're spot on, Jason. We are constantly battling the urge to go up market faster and do more.
You started as hotel engine, hotels only, and then customers started asking for flights, then cars. How did you decide it was time to expand versus staying focused on hotels?
Yeah, what we noticed in the data was our customers were graduating away from us. So we would get them for lodging. And then as those companies would grow, they would say, hey, we need the 3-in-1, we need the 3-in-1. And so it was a pretty natural evolution, to be honest. I'm really, really happy we started in the hotel space. It gave us the chance to really go deep and really understand a very complex industry, which we did. And we did that really, really well. And then we layered that on once the customer base pulled us enough.
How did adding products kind of change the growth motion? Is there a wallet share expansion with existing customers, or did it unlock entirely new acquisition with folks that were only willing to talk to somebody that was doing all three, or maybe both?
Yeah, well, it allowed us at first when we were just hotels to really go deep and be, have a very good niche in the companies and industries that just needed lodging. What it did is it expanded the TAM. It expanded the industries that we could sell into.
One thing we talk about in this show is kind of the ugly parts of growing too, not just all the success stories and the big wins. So when you went from one product to three, what broke and how did you fix it?
We're still working hard to get our flights product, especially to be more a consumer grade product. It takes a long time to truly understand travel. It does take quite a while. And so we launched flights and cars to complement hotels, with the primary focus still being we are a lodging centric and focused business. So we didn't disrupt the entire go to market motion. We didn't have to retool all of this stuff. And then as those products matured, we then started to, look at those different industries that we talked about, with more focus. But once we added it, they were really these additional add-ons, nice to haves, until they became kind of their own first-class citizen, if you will, inside our product.
Let's talk about how you fund growth, because your approach has been unusual. You took less than you were offered at your Series C. What is your framework for how much capital a startup actually needs?
I'll say whenever we looked at the dollars, it was always around what do we actually need, not what do we want. And maybe that's foolish. Time will tell. But I think money is the root of a lot of problems, a lot of solutions too. A lot of companies need a lot of money to get where they want to go. In our case, we had built a good business that was cash flow positive and profitable. And so we didn't have those same constraints and needs as a lot of other companies. For us, it was really stand up the balance sheet a bit more. We're getting bigger. We know that there's going to be opportunistic things in the future. And so let's be prepared for that. But let's also not have a ton of dilution when we know that the business is, well, maybe we don't know, but we're betting that the business is going to be bigger tomorrow than it is today. And as long as we can do that, then I think we've made the right calls.
How do you build a growth culture that's aggressive while also being profitable when those two things feel like they're kind of in tension?
So the way that we grew did not require gobs and gobs and gobs of money. And I say that from maybe some of our peers or some of these modern companies. We could raise a lot of money, we can start to build the brand now, but the money makes companies do crazy things. And I think there's a time that we were not in a great position to basically, we weren't responsible enough to get that much money in the bank. If you go take $1 billion and you put it in my bank tomorrow, what would we have done? So I'm glad we had the discipline to say no. You look at the people that won the lotto historically, right? Like that's the same truth, for business. So we've just been disciplined because, we didn't need it the same way that a lot of companies did.
What did you say no to that maybe some of your competitors said yes to, and how did that shape where you are today?
I think one of those is taking money.
Yeah.
Clearly when you're getting $200 and $300 million offered to you, it's enticing. I feel like I don't want to dilute this whole team this much this early on. I think that if we do this in step phases, it will end up much better for everyone. It's the discipline of not getting too much cash and spending it too fast on maybe, bigger bets than we're ready for. Um, that, the other one I would say, Jason, to this is I think talent on the talent side. We got a lot of pressure to like go get the been there, done that person, like go get the person that has done this 2 or 3 times and it will work. But I think the phase and where we were in the business and the culture that we want to build, we're all doers, very flat organization. But we don't have a busy cap table. We don't have a bunch of investor relations that we have to worry about all day that I have to have people kind of come manage for me. So I think we have a unique ability to really focus on building the business and finding builders. And not to say that people that have done this multiple times aren't that, but I think finding those up and comers has always been something that has served us very well.
I want to go somewhere else because it's a spicy take, and I think a lot of founders may relate to it. You've tried to hire a CMO multiple times, and it hasn't worked. What specifically didn't click?
I think it's very, very hard, especially at the level that we could attract at the size of our business for someone to come in and take that much surface area, that many modalities. But how you truly get expertise or specialization, it's challenging. And I don't think our company, maybe our brand, who we could attract for that role, so on and so forth, was in the right place. And so what we've done is we've really gone down the more specialization route. Right? If you're close to the product, you'll live in the product organization. So think of like PMM. Our growth roles certainly are more specialized around that. So we have growth engineering and some of those teams that are literally just focused specifically in growth. It served us well. But I think having that one role where everything from brand and creative to growth and some of the systems and automation, I think it's just very, very tricky or challenging for anyone to be able to do that all really well.
What changes when you make that shift? Is it in hiring, org design? You just talked a little bit about product marketing, seeing product, and what are you actually measuring in terms of holding the growth folks accountable?
Not that we don't believe in marketing. I mean, there's a lot of functions of traditional marketing that sit within our growth organization. So not to get that wrong, but I think the idea, I want them to wake up every day and think about their growth specifically. And then I want brand to think about brand strategy and the creative side separately. But I think what we've done here is we've got a team that wakes up every day and thinks about growing the business, whereas some of the creative side that maybe traditionally sits in marketing is with a creative team on the side. So we've just really split it up into, I think, the ways that make more sense, generally speaking, from an outsider looking in, maybe somebody that doesn't know a ton about the space, and it's bode well for us.
So let's talk a little bit about the AI in the travel stack. Where is AI actually changing how Engine operates today? Not the vision deck, but the reality.
Yeah. Well, I love the breakout of the vision board and the actuals because I do think that that is so much in the space today. We're doing a lot today in the products, whether it's personalization, whether it's the customer support side. Over 50% of our cases now are fully done with AI, with the agent and the customer. And that number will continue to grow. So that's today. I most likely know what you're going to book. If you've booked a few times with us, I can tell you what you're going to book next time, most likely. And I could just, rather than scrolling through 300 search results. These are areas today that we're doing a lot of. There's so much more behind the scenes with content, with pricing. AI is really alive and well in almost every aspect of this business today.
You've been running the company for 10 plus years. Most founder CEOs either burn out or get replaced at this stage. What has allowed you to kind of weather the storm and navigate all the hype cycles in the ZERP era and the pandemic and everything that I can imagine as a founder CEO of a travel of a company touching travel has had to go through? And what has kept you kind of operational and still accelerating?
I just love growth, man. Jason, that's just there's nothing else like it. We'll put up nearly triple digit growth this year on a pretty big base. There's nothing more, I don't know, engaging or exciting than that. And honestly, every day it's a new challenge. Keeps you young.
How has your role changed from those scrappy
Oh
early
my God.
days to running a 1,000 person, $2 billion plus company? And what's something you still do personally that maybe most CEOs at your size and stage have handed off?
Yeah. Well, it's changed in so many ways and it's stayed the same in so many ways. Listen, we have the best team we've ever had. And I think that's a very exciting change as you see specialists come in and do incredible work in areas that you had no idea of, like how far the actual opportunity in that particular area could go. I'd say the same is I love to run very flat organizations. I'm very close to product and I want my entire team to be. I believe if you lose the details, you lose the business. So everyone in any sort of leadership role at this company must know the details intimately. And so to that point, we're still very, very close to it. Yeah.
All right, speed round, some crisp, quick hits. One metric that you look at every single week.
GBV.
The hardest no you've said as a founder that paid off.
Take more capital.
One piece of advice for a founder building in a category no one thinks is exciting.
Do it. It's probably been overlooked by too many people.
Favorite hotel you've ever stayed in while working at Engine?
Four Seasons in Maui.
That is a good answer. Eli, where can people find you and Engine online?
Yeah, engine.com. Hit me up on LinkedIn and an offer to anybody new business. We'll give you $250 off. Mention Frank Growth to your account executive, and we'll make that happen.
That's awesome. This was clear, specific, and real. Exactly what this show is about. Eli, thank you for coming on.
Thanks so much, Jason. Really appreciate it.
That was Elia Wallen, founder and CEO of Engine, and a masterclass in building a multi-billion-dollar company by going where nobody else wanted to go. Here are my quick top 3 from today. If you don't remember anything else, remember these 3. 1, let your customers pull you into the opportunity. Eli didn't write a business plan for travel tech. His customers literally said, book hotels for us. And he said, no. They kept asking. When he finally looked closer, he found a massive gap between the OTAs and the TMCs that nobody was filling. The best businesses aren't invented. They're discovered by listening to the customer pull. 2, discipline is saying no to money, not just spending. Eli turned down more capital than he took, and he compares overfunded startups to lottery winners. His line, money makes companies do crazy things. The same discipline applied to hiring. He resisted pressure to bring in big resume executives too early and instead bet on builders and up-and-comers who could stay nimble. That kept Engine flat, focused, and fast. And 3, specialization beats the super CMO. Eli called the CMO role nearly impossible. Too much surface area for one person to own well. Instead, Engine split growth engineering from brand and creative, put product marketing inside the product org, and killed the idea of one leader owning everything from demand gen to brand strategy. His take, wake up every day thinking about growing the business, not managing a marketing department. One action that you can do this week in less than 10 minutes, look at your org chart and ask, is there a role where you've stacked too much surface area onto one person because it seemed easier than specializing? If the answer is yes, especially in marketing or growth, write down what the role actually needs to own versus what should live somewhere else. Eli's move from CMO to specialized growth and brand teams didn't just solve a hiring problem, it unlocked focus. And one more thing, Eli's offering new businesses $250 in travel credit to get started on Engine. Head to engine.com, mention Frank Growth to your account executive, and they'll make it happen. Links are in the show notes. That's Frank Growth. If this gave you something you can use this week, follow the show and share it with one operator or founder who needs it. I'm Jason Shafton from Winston Francois. We help companies build sustainable, repeatable growth with a proven operating system. Show notes and takeaways are in the description. Be frank and keep growing.